Unicorn TV is brought to you by Symetria. Symetria offers ongoing liquidity management to attract and retain the best talents. Give your team the benefit they desire and deserve and win the competition over talents with Symetria. Hi, I'm Lidar Grave-Lazi.
And I'm Ziv Kenan.
And welcome to Unicorn TV, where we discuss what's new in the private markets and meet with leading tech companies. Unicorn TV is produced by Symetria, a provider of secondary liquidity solutions in partnership with ILTV and FinTech TV. And now stay tuned because coming up on today's show. One Israeli company aims to reshape the way international workers manage their finances. And the Tel Aviv Stock Exchange unveils its new financial strategy through 2027, including developing a new platform for digital assets. And our first guest, Rewire, is shaping the way international workers manage their finances by building the first neobank tailored for the unique cross-border needs of migrants worldwide. Led by values of equality and social good, Rewire aims to include migrants in the financial system to enable a fair banking system. And joining us now with more on this is co-founder and CEO of Rewire, Guy Kashtan. Guy, thank you for joining us.
Hi, thank you for having me.
So can you tell us a little bit about what Rewire does and where did you come up with the idea?
Of course. So we founded Rewire in 2015. Initially, when we learned from a caregiver, a Filipino caregiver in Israel, that was close with the family of one of the co-founders. We learned how tough it is to send money back home to her loved ones. So she left her family back in the Philippines, migrated to create a better future for them. And she had to pay between 6 and 8% dealing with cash just to send money back home. So 8% of the money she earned in Israel. When we helped her for the first time, the next week, 5 of her friends came with envelopes of cash, so we helped them as well. And what we saw there is a huge opportunity. Over 250 million migrant workers worldwide send money, over $1 trillion every year, to help either their families or create a better future for themselves. We're also underserved and underbanked using cash and other services that cost a lot of money. And also the virality aspect of helping one and bringing the rest was something that was appealing for us. And most importantly, helping a population that we would love helping. It's what actually got us to start Rewire. So we started with $300,000 raised from local investors who knew us from either college or other sort of professional activities. Over time, we raised over $60 million, expanded from Israel to the UK and the rest of Europe. And also in terms of our product offering, it started as money transfer, but over time increased to provide migrants and their families, which is a big part of our vision. Over time, many of the financial services that they need, from insurance to debit cards connected to local accounts, from credit services that we are just now launching and plan to do more.
It's not that simple, right? To operate in this very crowded area where you have Western Union and you have fintech companies like Payoneer, giants that are operating in probably the same atmosphere that you operate. Can you tell us a little bit more about your journey for product market fit and until you eventually sold the company, right?
Yes, we are now in a merger process with Remitly, and we'll talk about Remitly soon. Nothing about fintech is simple, from the licensing it requires to anti-money laundering and other activities that you have to perform, even before talking about competitors. When we started Rewire about 8 years ago, the competition landscape wasn't as big. Yes, we had Western Union, we had MoneyGrams, a few giants that are more old school, brick and mortar, now becoming more digital. And over the last several years, with the big opportunity, also other companies like Remitly and Wise and others have grown to become very big competitors of ours. We had the luxury of starting in a market where they don't operate. So only when we expanded to Europe and the UK, this is where we met fiercer competition. But still, the market is huge. Most of the customers are using brick and mortar cash solutions. So the market is ripe for disruption, and these companies, the digital ones, digital first, are still leading. Remitly, for us, which ended up acquiring us in a merger process, has always been our number one priority in terms of long-term exit strategy and joining them. And this is on the business side, when we actually met the people who manage Remitly. We found like-minded people with similar culture and similar vision. And for us, joining a bigger company allows us to fulfill our own vision just many years earlier with a company that has already been very successful in many of the things that we have been trying to achieve over the last several years.
Now, the story of how this all got started and how far you've come today, it's really inspiring. And I'm curious, you have such an immense social impact helping, migrants who are trying to create a better life. I mean, how do you measure the social impact that you create?
Yeah. So I think there's direct and indirect ways to measure it. So direct, I would say how much money we actually helped migrants save when they send money, which services we brought to them, like insurance and credit, that they would otherwise have no access to. This is the very direct way, and we can actually count that to the dollars. But if you look at the impact we had in the market, let's take Israel as an example where we launched. When we launched in Israel in 2015, the average take rate or pricing was about 6 to 8%. We launched with about 2 to 2.5% cost, so less than half. Today, the majority of competitors, including ourselves, are somewhere between the 1 and 2% cost for sending money home, which means that we drove the price throughout the market down, not just our own price, because other competitors either got out of business or had to match pricing over time in a way that is, of course, competitive. So we see our impact as market-wide and not just for the customers we serve. We're very proud of that. And so this is one around the pricing. And the other one, I'll give you just an example of our insurance offerings. On one side, we allow our customers, migrants, to buy insurances for their families back home. But on the other side, we also automatically insure in Europe customers who send above a specific amount.
What kind of insurance is it?
So for the family members, it's about injuries, dismemberment, mortality aspects. And for our own customers in Europe, it's about different types of disabilities. So if they are not able to provide for the families...
Like a micro-insurance?
Exactly. So for short term, we will provide. It's not a full life insurance, but it does help in extreme situations. And we don't even charge for that insurance. It's about creating value and that for our customers and their families. So very proud of that as well. And it's hard to measure because this is not something that is either done today or that they would otherwise pay for it. This is just something that they would not have available otherwise.
But having a social impact nonetheless.
Yeah, you're creating a lot of impact, in your work. It's, did you get any assistance from the UN or from the World Bank? Like, do you see impact investors that invest in you? How does it promote you?
So we don't have official impact investors that have invested in us, but I think it actually helped with all of our investors. So of course, no two companies are equal, but if you had to invest in between one or another company that has a similar business potential in your opinion, you would likely lean towards investing in the company that also does good for the world and for a population that is underserved. We did win the Extreme Tech Competition Challenge, and Jerry Young, a former co-founder of Yahoo, has invested at us through that competition or after that competition. So we did create relevant PR and opportunities and brought investors to us, and I believe helped them make the right decision, which was to invest in us. So there's no direct impact investment, but I think in everything we do and in every success we had along the way, what we call double bottom line. So on one side, doing good and creating impact. On the other hand, also being a for-profit company, in our opinion, created a lot of the opportunities that we had over the years.
So thank you very much for coming here today. It was a pleasure having you.
Thank you very much.
Thank you, Guy.
Thank you.
And now, the Tel Aviv Stock Exchange has recently presented its new financial strategy through 2027. And this includes creating a platform for digital assets using blockchain and venturing into crypto. The details in the following report. Accelerating the development and expansion of core business, developing digital assets and crypto markets, increasing engagement with end customers and the public, exploring the technology sales as a new business line. These are the main goals of the Tel Aviv Stock Exchange's new strategic plan for the next 5 years. The plan is based on an in-depth analysis of the trends and developments in the Tel Aviv Stock Exchange's business environment and in the markets. Most notable among these are the macroeconomic status of the State of Israel, the globalization of the financial markets, the competition among global financial centers alongside regulation that advances the removal of barriers and digital innovation trends. With regards to developing a digital assets platform, the plan aims to promote the implementation of innovative technologies, including DLT, tokenizing of various classes of digital assets, and smart contracts. The Tel Aviv Stock Exchange intends to examine multiple potential action plans, including conversion of existing infrastructure to innovative technologies, deployment of innovative technologies into specialized platforms, and offering a basket of services and products for digital assets. Additionally, the plan aims to market tech services and solutions to other small and medium exchanges with the goal of strengthening collaborations and Tel Aviv Stock Exchange's international profile, while highlighting Israel's technology and innovation leadership. These services and collaborations may include the acquisitions of holdings in foreign exchanges. The stock exchange will leverage its home court advantage in Israel to adopt and develop fintech and position it as a hub of services and products. Sarona Partners is an Israeli venture capital fund that has aggregated investments in over 300 startups, including 7 unicorn companies. Joining us now is Tut Shani, founding partner and CEO of the firm, and David Debash, COO at Sarona. Thank you for joining us.
Thank you for having us.
So, there are almost 400 VCs here in Israel. What makes Sarona Partners unique? What makes you stand out from the rest?
So Sarona Partners is in fact a group of companies where it also includes a venture investment firm, but also 2 accelerator programs and a media company and an innovation activity that serves multinational corporates that are looking for innovation. And by the fact that we are actually active in all areas of the ecosystem, we are in the intersection that connects the oldest industries in the world with the agility and the most innovative and technologically advanced and product advanced startup companies in Israel. And there are very, very few funds with this mix, which is very unique, not only in Israel, but in the entire world.
I know, you mentioned accelerators, and, we know of some, and it's so difficult to differentiate yourself as an accelerator. And I know as a founder that, not all founders appreciate accelerators in any how, not the experience. So what differentiates you, how to promote an accelerators nowadays?
So yes, so founders, and rightly so, don't appreciate whatever distracts them from business. And especially in Israel, where founders are at their second, third, fourth startup. So that's what we focus on. We focus on business. We focus on working on scaling their sales and their business and their operation. And we do it powered by a full ecosystem behind it. As Tut mentioned, we have quite an interesting footprint in Israel, and which means we're not just an accelerator, but we usually use the power of the ecosystem to make a difference.
And what do you offer your participants?
So it is a 6-month program. Mm-hmm. It's a really hands-on program. We really enter into their team. We see it as if we're part of the team for these 6 months. And their target is our target. Their success is our success. It is really a focused journey together toward achieving the next steps together.
And eventually you connect them with international investors?
Connect them with investors in Israel and internationally, of course. Mm-hmm. But it's also an idea of developing the business with corporates and becoming clients of huge corporates. Mm-hmm. You grow your business not just by raising the next big round, but as well growing your company in terms of sales and of manpower.
Mm-hmm. So, we've heard from you that you have sort of a footprint throughout the Israeli ecosystem. So I'm curious to ask, what makes Israeli technology lead in so many different global innovation fields, do you think?
David came to Israel from Italy, and he has both, I think, perspectives in a very interesting manner. So I think I'll let David
as a relatively new immigrant, not new as much, but I think it's really a unique mix of characteristic and Israeli culture. I can think of a few things. I can think of Israel being a small, relatively small country, and that allows it to be a small market to test and enter for startups. As well, the idea of having a military that is so up-to-date and so strong, from the tech point of view, really cultivates high-level technology, but as well high-level people in technology. But as well on the entrepreneurship side, you have people that are used to taking decisions in a highly pressure situation. And I would say as well, there is the Jewish/Israeli unsatisfaction of the status quo, continuous unsatisfaction of the status quo that makes you want to disrupt it and change it, regardless how many times you will fail to do it.
but that will push you to do more and more. And I guess that's one of the unique differences that I also saw coming here from different countries.
We'd love to know, now with the recent downturns in the markets, and we also interviewed before Amity Ventures. So we asked, kind of the same question about it, like, what's the recent trends that you see now in the market, and how this recent downturn in the markets has affected, your investment strategy right now?
So it's very interesting, to be honest. And I think many VCs are kind of standing behind the fence and stopping new investments in a way because they want to see where the wind blows and how valuations are being impacted and so on. On our perspective, what we see is a very, very interesting transition from deep technology companies to companies that are more business development led and coming to disrupt an entire industry, either in the areas of retail or finance or property tech or enterprise altogether. Remote work is a big topic these days. And not industry focused, but rather stage focused, or I would say approach focused, we see a big shift of mindset from both the VC side and the startup side to say, I need to build an actual business. I need to generate actual revenues. I need to be customer centric. I need to be sales oriented. And I need to show that there is an actuality to the business I'm trying to build. And what we've seen through the past 2 years of unicorn companies that have raised, crazy valuations without actual business going on or going public, and then their valuations got smashed. This cannot stand anymore. It doesn't hold. And I think that the startup community starts to understand that and shift their approach of building a startup accordingly.
Interesting.
Very interesting. All right, Tooth, David, thank you so much for taking the time to speak with us today.
Thank you.
And now our next segment, brought to you in collaboration with the Elephant Brokerage. Elephant is an Israeli-owned global platform that operates as a secondary marketplace for private tech shares. The platform presents a portfolio of private shares in late-stage private tech companies, which are offered for sale by private shareholders. The Elephant's innovative secondary liquidity platform offers an end-to-end solution to streamline all secondary events. The liquidity platform includes technology that eases the operational burdens on private companies and purchasers and streamlines the process from the start of a liquidity program through settlement. Through the liquidity program, clients gain access to a growing pool of institutional buyers which are carefully vetted and actively seeking secondary investment opportunities, while private companies have the power to select from an extensive global network of institutional and prominent investors. And our next guest, Algoz, sees as its mission to bridge the gap between the established algorithmic trading world and the still developing crypto economy, making it more progressive, reliable, and accessible. Joining us now with more on this is Alon Carniel, Head of Business Development and Funds Manager at Algoz. Thank you for joining us.
Thank you for having me.
So let's start by can you explain what a crypto hedge fund is? Let's start with that. And who can invest in such a fund?
Okay, so a hedge fund is a privately pooled investment fund which uses complex strategies and risk management techniques such as shorting, leveraging, and so forth, which are designated to a more designated crowd like high net worth individuals, institutional investors, and family offices. Those are our crowd.
The bread and butter.
In your company specifically is developing the technology for those funds, right?
Yeah, so we're developing, our specialty is developing trading infrastructure and trading strategies for hedge funds and investment houses. We are focused on the crypto space, okay? So hedge funds can be for the entire, you can trade in hedge fund equities, bonds, futures, and so forth. We are focusing our efforts on the crypto space.
So speaking of crypto, we've seen pretty much a big crash lately in the crypto market. Bitcoin fell below 20,000, Ether as well. How does a hedge fund makes money in those type of times?
So this is exactly what we're supposed to do. We're supposed to protect or use those strategies such as shorting and additional strategy in order to gain funds in a down cycle market or an up cycle market. We are bringing a more, I would say, sophisticated approach to trading, which might be a bit more aggressive or riskier, and therefore it is not, it is not relevant to the retail investors.
Nice. And we've seen a lot of crypto regulation lately coming in. Is that going to affect the industry in your mind?
Hopefully, we are waiting the crypto regulation. We are coming from the traditional asset side. Our crypto operation is quite new since 2017, but we're coming from traditional side before that. So we're awaiting regulation. We need the regulators to make it clear what is right and what is wrong in our market and move out all the trash and all those projects which put a bad reputation to our market. Once this will be governed by regulators, I think it will be more appropriate and more comfortable for investors to come in and taste the water.
There's a saying, be careful of what you wish for. And, with crypto regulation, that might be, because crypto regulation could also perhaps cripple some of your tactics as a hedge fund.
I don't really think so, because crypto regulation will relate to crypto, okay? We are doing trading, okay? So at the end of the day, it's the same if you're trading futures, bonds, or everything else. For us, it's just another trading method. For us, crypto is another asset class, okay? There's a lot of inefficiencies there. There's a lot of volatility there, which we like as a fintech company, which this is what it's special for.
Alon, I want to ask you, with Celsius crashing and taking the money of your client to bankruptcy and other protocols and hacks in the market, well, where do you see this industry goes in terms of the future of the industry? If it's continued to be hacked and we continue to see malicious acts in the industry, where do you think everything is going to go?
Yeah, so unfortunately, we will continue to see malicious acts still. But I think Celsius and Luna were not malicious. It was like projects that went the wrong way. Now, I think the problem with such projects is that they chased away those who were waiting on the lines to enter our space, like pension plans and endowment plans that are really chased away by those events. But again, I'm always, when I'm talking to potential investors, I'm saying to them, listen, the fact that you've seen like malicious acts or bad acts in traditional fund didn't take you out from the capital markets, okay? So it shouldn't do so in the crypto markets. Yes, we're evolving.
It should be noted, by the way, Celsius, that CDPQ invested in Celsius. It's a big Canadian pension fund, so institutional investor, and they lost there. So
correct.
I think that you're right that they'll be worried to enter now, and it's going to be some time before the market will recover.
Right, but I don't feel like it's 2018 all over again. We had the bear market in 2018, and then people thought, okay, it's the end of the crypto era. Now, when I'm talking to potential investor, it's not the same. They're just saying we're waiting on the lines now. We're waiting for the markets to rebound a bit again, and then we'll come back to the space.
All right, Alon Carniel, thank you so much for taking the time to speak with us.
Thank you for having me.
And that's it for today's show. I'm Ladar Gavelazi.
And I'm Ziv Kainan.
Be well, and thank you so much for watching.